Great. Thank you so much. Good morning, everyone. I would like to begin with a very, very famous Bollywood dialogue. अक्षय कुमार का है from the movie हेरा फेरी. पैसा ही पैसा होगा. Sounds great in movies, doesn't it? But in real life, founders spend years wondering पैसा आएगा कहाँ से? And investors spend years wondering पैसा देना किसको है? So today's webinar is essentially an attempt to solve this very Indian puzzle. On behalf of Dealplexes, I welcome all of you and thank you for joining us today. So before we get on with the webinar, just want to add that we, Dealplexes, are basically a financial supermarket. We are based out of Gurgaon. We are a small team, but we do pan-India business and we can cater to any financial need of yours. So whether you want to raise funds, whether you want to deploy funds, we are your single window solution for everything. Whether you are a startup, whether you are an established business, whether you are an individual, whether you are an investor, we can solve any situation that you are in. And we'll take this ahead, later on when we go to the question answer round. But today, I'm so happy to share that we have got startup founders, SME owners, chartered accountants, consultants, finance professionals, and entrepreneurs with us today. And I'm sure that many of you have had these thoughts, so I'll share 3 thoughts with you. सबसे पहले, बिजनेस तो अच्छा चल रहा है, बस थोड़ी फंडिंग मिल जाती, या फिर इन्वेस्टर तो मिल गया, अब इन्वेस्टर को कन्विंस कौन करे? एंड परहैप्स द मोस्ट डेंजरस थॉट ऑफ ऑल, शर्मा जी के स्टार्टअप को फंडिंग मिल गई, मेरे बिजनेस में क्या कमी रहेगी कि मुझे नहीं मिला? सच्चाई तो यह है that India has never had more capital, more investors, and more opportunities than it has today. There are angel investors, venture capital funds, private equity funds, family offices, strategic investors, SME IPO platform, and many more. In fact, there are so many funding terms these days that sometimes founders spend more time understanding the jargon than growing their business. कभी हम सुन रहे हैं seed round, series A, bridge round, ग्रोथ कैपिटल, वीसी, पीई, एसएमई आईपीओ, और जब तक आप इन सबका मतलब समझते हैं, मार्केट में एक नया फंडिंग टर्म आ चुका होता है. बट जोक्स अपार्ट, फंड रेजिंग इज नॉट रियली अबाउट रेजिंग मनी. फंड रेजिंग इज अबाउट बिल्डिंग कॉन्फिडेंस. इन्वेस्टर्स डोंट इन्वेस्ट बिकॉज अ बिजनेस नीड्स मनी. अगर ऐसा होता तो हर फाउंडर यूनिकॉर्न होता. Investors invest when they believe a business can scale, create value, and generate returns. And that's exactly what today's discussion is all about. And to guide us through this journey, we have someone who has spent more than 2 decades working with founders, investors, family offices, venture capital funds, and growth stage businesses. Mr. Nitin Jain. He has advised companies on fundraising, strategic partnerships, mergers and acquisitions, and growth strategies across sectors. In simple terms, if fundraising were cricket, Nitin has spent years both in the dressing room and in the commentary box. And he has seen what works, what doesn't, and most importantly, what makes investors say, let's take this conversation forward. Instead of, we will get back to you. क्योंकि जब भी कोई कहता है we will get back to you, we know that what that generally means. Okay, so before I hand it over to Nitin, let me leave you with one final Bollywood thought. Mogambo khush hua may work in movies, but in business, the real moment of happiness is when the investor says, term sheet bhej rahe hain. And trust me, that dialogue sounds better than any Bollywood dialogue. With that, let's get started. Nitin, over to you.
Thank you, Suman. Thank you. Thank you very much for that great introduction. And I think, your words have really brought a lot of energy in this morning. So with that, note, good morning to everybody. And as Suman mentioned, I see a lot of, startups, CAs, SME promoters, and, many advisors who are part of this webinar and looking to benefit from, kind of a thought sharing process rather than just we are speaking and you're just listening. So we wanted to be a more collaborative approach, right? So, as Suman has said the context that, okay, we understand a lot of businesses struggle to raise funds, right? And now that problem, to my experience and understanding, is not really a pure financial, but a lot of aspects are attached to the strategic aspect. And we need to understand that, okay, what are the strategic initiatives and areas that we can focus on. So our perspective for any, potential fundraise is enhanced ultimately, right? So a lot of struggles are faced by, early stage startups or even at a growth stage, and a lot of SMEs, right? And they have a limited visibility in the ecosystem. And with the right side, right advice and hand holding and certain rights approach and steps, I think we believe, that journey towards any fundraising can be much more, kind of convenient ultimately, rather than just thinking that, okay, this is something they really don't want to get into. And, or maybe, they feel that they're not eligible to kind of, even approach a strategic or a VC or a private equity investor, right? So, with that, I'll give you some stats as we presented on this slide. There are more than 6 crore SMEs in India. There are thousands of high growth startups, and startups are like, every day there are new startups getting registered. People are coming with new ideas. They want to address certain challenges in the ecosystem or their own sector and segment. And they kind of, encourage to register a new company and start a business, right? With that, there is also increased participation from investor side, right? A lot of investors are getting registered, their corporate funds, their FDI funds which are available. Banks are coming with new schemes which are also connected to equity. And they are looking at, these startups who are potentially be the investing companies, and both can go together and ultimately transforming the economy, right? Growing SME IPO, like many, businesses vision to ultimately do an IPO. But before that, there is an also one step which has been introduced as the SME IPO. And then, definitely there is a private market which is kind of expanding every day, right? Now, the broader challenges are that, access to capital. That's one way to put it, right? Access to right kind of investor, right? Okay, you want to have investment in the company, but who is the right person who can invest in the company? Who has more focus towards your sector? Who has more focus towards your stage of companies? Who are more, kind of comfortable with early stage founders who may be, kind of not very, comfortable with financial numbers, but they may be sound from a technical aspect, right? Before, kind of you say that you want to raise fund, the other aspect which can also be considered is, doing a joint venture, certain type of tie-ups which ultimately enhance your, scope for your product or services or the solution that you're looking to present, and kind of create a very strategic roadmap which is kind of logical on the ground, right? So the overall strategy is a combination of these factors, and as a founder and we, as a partner with these founders, enterprises, keep these aspects in mind before we take any further steps to kind of go in the market and approach any potential investor. Yeah, next slide, please. Yes, next slide, please. Yeah. So, kind of filtering down the whole aspect further, what are the specific struggles, the business can encounters when they're looking to scale, right? So their expansion plan remain unexecuted, right? People think they want to do a lot of things. Ultimately, they feel, okay, some of them they cannot do, and some of for them they require larger resources and larger funds. But right, ultimately, you have to decide that what are the baby steps that you can take, right? Which ultimately kind of boost the confidence of the investor, of your customer, and every stakeholder who is kind of engaged with you on different aspects, including employees, right? So your roadmap for execution has to be very firm. Difficulty achieving product market fit and new markets, right? You want to introduce a new product in the market, but how feasible it is, how much, kind of is cater to the needs of the ultimate customer or the client. That really needs to be kept in mind, right? Capacity become a bottleneck, right? You want to kind of ultimately approach a large market, but feel that, okay, you don't have the right capacity or adequate capacity to cater to the market. And again, building that capacity requires a lot of fund and strategic support. And that's where, a lot of, businesses, so, face struggle to scale, right? And then there is a strategic opportunity which you think you have missed, right? There are a lot of initiative that comes from government side, the industry bodies, kind of come up with new ideas to kind of ultimately be more relevant to the end customer or the, people who are you looking to cater, right? And definitely there are a lot of geopolitical and international scenarios which create a lot of opportunities, right? So as a founder or a promoter on the ground, I think one needs to kind of keep track of all these development, see where things are relevant, and ultimately connect with the right people so that you have certain, specific progress on ground. So ultimately, you kind of feel that you are, as a step-by-step approach, overcoming your struggle, right? Definitely, the funding is ultimately a objective, but before that, with the little, steps and kind of interacting with the right people who have a right knowledge and then kind of become your active advisor and they have kind of believe in the overall success of your venture. I think that's where certain steps can be taken, which ultimately help you to feel that, okay, you are kind of overcoming your challenges and ultimately there is a roadmap to raise funds as well. Right. That makes sense. Yeah. So in this slide, we are kind of, work showcasing a broader lifetime of a company. When it starts as a startup and when this actually kind of become ready to do an IPO, right? When we talk about a startup, it's, ultimately a business, right? So what you're going to do as a business, that needs to be very clear, right? And then what's your execution plan and how you're going to grow in the market, right? So, a lot of young founders are coming with technology solutions, right? And these technology solutions may be, very kind of able to penetrate very quickly in the metro cities. But let's say when you try to go beyond in, let's say, tier two towns and tier three and rural areas, that's where the people are not quite, savvy from a technology aspect. So that's where I think, one has to kind of think as their execution plan that how this technology can be, made user friendly, right? What are the elements that can be added so that even the people who may not be, very comfortable using smartphone, but still can kind of, engage on the platform and understand from his usability point of view, right? And that's how you increase your customer base and ultimately penetrate in the market, right? At this stage, that's where you become more approachable and visible to, let's say, a lot of VC community, right? Including some of the family offices as well. And that's where you kind of, create a roadmap to become a pan-India player and showcase that you can ultimately transform the ecosystem, as compared to kind of the way it is has been, operating traditionally, right? So these kind of business model and approach the VCs particularly would like to see, right? And once you kind of onboard a VC or a strategic investor and kind of capitalize on the funds that you have raised, and that's where you kind of, reach a stage where you are more appealing to private equity funds. Right? Private equity funds look at companies where there is no product uh, challenge or the risk, where you only looking at scalability within your country or even looking at international market, right? Where with the funding there will be exponential growth in the company, and there is a road towards sustainability as well, generating decent margin, so ultimate valuation can go up. Right? Once all you grow through all this journey, and you see that investors are looking for exit, and you want to kind of launch an IPO where your approachability and visibility to the masses is much more enhanced. That's where you're looking at certain strategic acquisition or an IPO route, where you connect with larger audience and masses, and your product is kind of become more relevant, and then you become start to kind of behave like an enterprise, where then you become kind of join our investor side, and you have a capability to kind of support a lot of startups and growth companies again, and again kind of enable the same cycle to move further in a much faster pace, right? And then I think from our overall this perspective, you can visualize that how the economy will transform this with those process, right? Some synchronization definitely needed so that you understand your business, you understand the investor perspective, you understand the strategic initiatives, and you understand that, okay, what is the logical roadmap that can, really make you confident that you are not more than 2 years away from your IPO, right? So we can definitely, kind of discuss further around on these aspects. But before that, let's just move on the next slide. Yeah, so talking about again a specific strategic roadmap that the companies can, follow. These are more of very, a logical thought process. So geographic expansion, capacity expansion, strategic partnership. You want to acquire some companies or adopt technology, or even, kind of product expansion. But let's say, when you are looking all these aspects from a growth perspective, right? You have to kind of, put it in a, let's say, hierarchy that, okay, what are the things that you need to do initially, and then what's afterwards, and what's done subsequently, right? Which, because each and every way required your capital and investor, and definitely a strategic and export support as well, right? As you grow in the market and become more relevant to your customer, you will feel that, okay, each aspect become more compelling for you to kind of adopt, right? So let's say one aspect of capacity expansion. Right? Once you expand in different geographies and you have a larger product portfolio to offer, definitely you would like to, expand your capacity. But how you expand your capacity, which are the geographies that you're looking at, how you ensure that you remain near to your customer and ultimately, with the reaching out to larger geographies, you do not really increase the cost of the product or overall price to your customer, right? So these has to, come up very strategic thought process. A lot of VCs and private equity, they do carry a lot of insight toward these aspects. And once you are able to raise funds from them, they can actively work with you to kind of work, build an ecosystem which is more efficient, more fruitful, and ultimately provide, visible benefit to a customer, and that ensures the ultimate long-term stickiness, right? And that proves your business as a more successful business. And ultimately, you are able to call yourself as a unicorn as well, which ultimately means that you're crossing a, let's say, valuation of $1 billion. But let's say from a, again, a market perspective, that's where you're totally changing the dynamics. The people engage or, buy certain products or avail certain services or interact to kind of, get engaged with certain solution, right? So these are the, kind of certain strategic growth aspect which need a very curated thought process, right partners and the right set of investors so that you are able to meet your milestone according to the fund that you are able to raise. Yeah. Next slide, please. Right. So till now we have been talking about more or less from a founder or the promoter perspective. But definitely, there is a strong prospect from investor side as well, right? How the investor thinks, what kind of investors are there, what kind of ventures they would like to invest in, at what stage they come in, right? And what's your kind of right approach to kind of engage with them so that your discussion become fruitful and you have better chances of closure, right? So there are clear categorization. There are early stage investors, which include a lot of, let's say, angel investors, a lot of friends and families, and family offices like who are like big corporate families and they're looking to support a lot of early stage founders who have some good ideas. They're committed to space and they're happy to engage and provide initial funding so that you can spend certain money to build your product or initially engage with the customer and build your small team as well, right? So that's where the lot of early stage investors comes, right? Growth stage investors, there is, a proper, kind of investor community, which also include venture capitalists and a lot of particularly private equity funds, right, who are maybe domestic or even international, some of the large family offices, and some of the companies who are like looking at a company from a strategic point of view, right? Or maybe, there are a lot of international enterprises who are looking to kind of enter India market as well, right? So there are different pedigree of investors. But at this stage, what you need to kind of, convince the investor or kind of, communicate with them in a way that they don't feel that there is a product risk, right? So you introduce a product in the market, the people are using it, they are paying, price to buy it, right? And then you feel that, okay, you have found find the right product fit, and then you want to expand into more geographies and different segment of customer as well. And that's where these PE funds can come with a larger ticket, check sizes and help you to, expanding quite aggressively. You kind of have observed this kind of journey in a lot of, let's say e-commerce platforms, a lot of aggregators who are kind of, following this route where you see that they have, raised large sum of money, right? Now there is, after you kind of grow that way, there are investors who particularly call them late stage investors, let's say pre-IPO investors. So once you kind of raise a lot of money and you more or less become pan-India players or even having international presence, they are kind of late stage investors who kind of already have a good, large portfolio. And they kind of look at, synergies with that portfolio so that your usability of the products or solution much enhanced. You have better access to different markets. Your overall engagement with the client or it's become more stickiness, and you are increase the value of your transaction with the customer or the client. Right. That's where the late stage company investor come in. Most of these category also include a lot of pre-IPO investors where the company already have a clear roadmap to launch an IPO. They may not be straight away going for the IPO at this moment, but they have a clear plan to, let's say, in 12 to 18 months. That's where a lot of late stage investors come in and they kind of again write a very large ticket size to the enterprise, to these startups and those such companies. Right. Now the next stage is more of an IPO stage where a lot of investors are looking for an exit because they have supported you right from the beginning, and you raised few rounds, and they are larger investors on the cap table as well. So many of the investors are looking at exit, ensuring that they have multiple returns of their investment, and ultimately, that further boosts their confidence in the overall startup investment ecosystem, right? If they are able to make good returns at the exit, they further, make, go invest in startup and growth stage company, and the money is further channelized, right? So that ultimately, again, evolves the overall ecosystem, right? So some of the in this process, some of the strategic initiative that promoter or investor can explore is the merger and acquisitions, right? While you are growing in the market, you may have a certain competitor. There are people who are kind of operating in different geographies, and you believe that their product and their overall sources and your founder strength can complement the overall both the businesses, and that's where you're looking to kind of acquire or kind of do a study type, so that your inorganic growth part becomes much more, kind of quick ultimately, so to say, right? So next slide, please. So what we have talked about, type of investor and broader approach, but what the investor is really looking at. So let's say if you as a, early stage startup founder, ghost investor, so whether you feel that, okay, I should be able to present my financial quite well, or whether you should focus on, let's say, more on a product, or maybe, your initial founding team or the team that you have built up, or maybe you can just focus on your own background. So what are the things that really excite the investor ultimately, right? So each stage has different focuses. From border perspective, I think if you go as a startup, I think the larger bet is on the founder. The more you are able to show your insight and why you kind of launch sort of product or solution, I think that should be the starting point of any conversion within a startup. And then kind of convincing that with your ongoing research that, okay, how well you have identified certain gap in the market, right? Like, okay, somebody is really struggling to kind of let's say in the customer service aspect, or maybe let's say if somebody is really struggling, people are really struggling to get a good quality baby product, or let's say some good quality product in tier 2 towns, right? So those could be certain challenges in the ecosystem, and you have a specific product to solve that with the proper market access, that your customer will be able to access your product, right? So I think that particular insight and roadmap really helps to boost the investors confidence, right? And then how you are able to prove that, okay, your product remain relevant in terms of pricing, in terms of reachability, and the kind of, let's say, different range that you are offering. I think, those specific steps really, kind of help to have a very fruitful discussion with investor, right? So one thing is very, again, quite a lot highlighted is the differentiating factor, right? So you just do not really say that, okay, I'm, one entrepreneur who is just, producing bags as many other are already doing, right? How you identify that, okay, if you are able to see that there are some challenges where, students are struggling to kind of handle their bag, or youngster prefer certain kind of bags, or they are kind of, different need of kind of people who are going to offices and they require more specialized work. So identify that, okay, what is your problem area, and how well your product is kind of fits in that specific need, right? And there should be enough market that, okay, you're catering to, let's say, metropolitan cities, and there is a large working population there who require these kind of, and ultimately you have clear map for, penetration in the market, right? High corporate governance, right? So, you have to move in a very, professional manner, make sure that you're compliant on every aspect. Your relationship with your employees and customer and vendors remain very, kind of very structured, right? So there should be no casualness into that, right? That boosts that, okay, the proper documentation is there, so that when the stages move to a certain due diligence level, you do not face any challenges to kind of overcome that due diligence process, and then you have a stage of, let's say, shareholding agreement signing there, right? So these are the basic, aspect that one can keep in mind in terms of what the investor is looking for. There is a, certain minute aspect as we build on the discussion, we can also highlight that, right? Like there is a mention that, okay, their growth potential, right? Many companies, once they reach a stage of, let's say, 50 or 100 crore rupees, the growth starts to kind of get slower, right? And that's where I think the startup or the promoter required to bring more innovation in their overall offering, right? expand their market base, right? And, increase the product range as well so that you remain relevant and you are able to kind of maintain that high growth trajectory till the time you are kind of have a visibility to the IPO, right? So these are the broader aspects which the investor is kind of looking at. We can definitely, discuss further as we, build our discussion. Yeah. Next slide, please. Yeah. We have seen in the market that, okay, fundraising is an ongoing process for any businesses, but many of the business fail to kind of raise the fund on the right time, right, when it's critical for them. And sometimes they are able to kind of really not able to reach the right investor for themselves, right? So it's equally important that we identify the why businesses fail to raise fund, work on those aspects, and build a much stronger partnership so that we can address those failures and ultimately then claim establish a clearer roadmap so that there's more confidence that the business will be able to raise fund, right? So sometimes the businesses think about fundraising at a quite late stage when the situation is very critical. You may be having a lot of liabilities on the balance sheet, right? There's a lot of compliances that has come up, right? And then you approach the investor, and investor takes their own sweet time to analysis, and ultimately looking at already certain challenges in the balance sheet, they may again does not really feel to go ahead in a quick span of time, and that further enhances the business challenges, right? And then we say that the fund could not raise any fund, right? So and the other thing is lack of investor readiness. You cannot just say that okay, you just go in the market and raise fund. There are certain, documentation that you have to work upon. You have to work on your strategy. You have to kind of, make a list of the potential relevant investor for your business and stage of your business, right? And then ultimately think about the deal structure as well. That okay, how much, let's say equity side, how much you're looking to dilute, what is the valuation, how much fund that you're looking at, and overall how the deal structure is getting built, right? Your financial reporting has to be up to date, right, and very firm, right? There should not be any delay or kind of, it needs to cover each and every aspect from, let's say, P&L, balance sheet, and cash flow aspect. And there's also definitely a strong aspect of maintaining a very detailed MS as well, right? Then, with the fundraise that you're looking at, you need to have a clear growth strategy that where this fund will be utilized and how this fund will be, helping the company to grow and ultimately make, specific return for the investors as well as definitely for the business and promoters, right? There should not be any unrealistic valuation expectation. The valuation needs to be benchmarked, in a very let's say, mathematical manner, right? So that once their discussion starts on the valuation, you should not be coming on the back foot that, okay, you're just quoting a number, but you don't have a kind of a strong backup to defend that. So go with a proper calculation, do proper benchmarking, understand your peers and what kind of deals that are happening in the ecosystem, and ultimately then you are able to put up a valuation number which is more logical and defendable, right? There should not be again no poor governance practices. Like I mentioned, your relationship with your employees and vendor has to be strong, right? Your internal processes or compliances, needs to be kept in mind so that, one feel that you are kind of following the best practices, not in the world, but let's say as a national level, right? And you should not be, targeting any investor on the market, right? We understand the, it's critical aspect of one today's fund, but every investor is not looking at every company, right? There is always a specific segment, like we also discussed earlier, this is a type of investor. So you need to kind of see that, okay, whether you fall in early stage segment or you are at growth stage or you want to look at something as pre-IPO. And according to your ticket size, you need to kind of create a list of investor and approach them in a very, professional and structured manner. So they are able to understand the maximum potential of the venture, and with the proper fruitful discussion, there is a clear visibility for the funding project. Right. Next slide, please. So there are certain frameworks that we can discuss as we partner with a lot of startups and growth stage companies, SMEs and large enterprises, right? So this is more of a a collaborative approach. Definitely the founders come with very strong background. They have a, let's say, a lot of experience and insight into their businesses, understand the customer or the client's psyche, and kind of follow approach which is more efficient, sustainable, and ensures a growth in the long-term part, right? So, you can ask yourself that how much fund you're looking to raise, what is the specific requirements for the fundraise, and the kind of growth that you're able to generate, and ultimately how that growth will have a roadmap or a vision to kind of make you a leading player in your own space. Right? It should not be a case that, okay, if I reach, let's say, 50 or 100% growth, I'll be more satisfied. I need to benchmark who is the leading player in the ecosystem, how they are growing, and what's my approach and step-by-step, strategic roadmap, so that I can be one of the leading partners, right? And that is the thought process which the investor will also appreciate. That okay, you don't really kind of looking to just cross one single milestone, but ultimately look to become one of the leading players, and that ultimately will help the overall, transform the overall segment in which you're operating. Right. So next slide, please. So, you know, is the business is really ready for the institutional capital? So we have talked about different type of investors, and when we talk, say that they are institutional, like proper registered, SEBI registered venture capital and private equity funds, right? They have a very, kind of proper theme to follow. They prefer to see a very, strong corporate governance practices, and overall company structure or enterprise venture structure has to be very, professional, right? Which is ultimately take care of a lot of legal aspect, a lot of operational aspect, administrative aspect, and your agreements with the vendors, customer, or partner has to be very intact, right? So when you kind of trying to think that whether you're ready for institutional investor or not, I think you need to kind of work on a lot of internal processes, a lot of work on the documentation, a lot of work on from compliance side. And once you kind of benchmark all these things, and then only you have a better confidence that you are specifically ready to raise from institutional fund, which may be a large international institutional fund who have a very high standard for corporate governance and let's say protecting the rights of the investor as well as for the customer, the clients you're engaging with, right? So there is I think a lot of engagement that you have to do with the right advisor and partner who can help you to kind of bridge those gaps, and then you become kind of a more enterprise and able to raise from the large institutional funds. Yeah, so we have talked about a lot of aspects of the overall fundraise, but if I have to mention a specific case study, right? So I have personally worked with a lot of technology companies who are kind of offering SaaS solution as well as a AI native company solutions, right? So the company has been kind of offering a solution in the market, and they kind of have a strong relationship with their clients, and now they are going in the market to raise fund and looking at to become more a national player or even attract, let's say, a lot of clients from developed markets, right? And that's where they needed fund. So we help them to, create a proper roadmap, right, with a proper, let's say, financial model, which clearly outline the fund requirement and how it will also help the company to create the IP for themselves, right? So pure technology IP, which ultimately, uh, contributes to the overall valuation or the overall, stickiness with the clients ultimately, right? So creating that proper roadmap with the financial number, with a month-on-month approach and looking at a larger let's say ecosystem. We create a structure, and we also kind of create a deal structure or a deal construct, so the investor understand that how much they're going to invest and what kind of stake they will get, and with the valuation and future prospect of the company, what are the kind of return that can expect. So that ultimately, kind of helps to create a or do a very fruitful discussion. And then there is a confidence that okay, looking investors are looking at it quite seriously, and there is a visibility to get a valid term sheet very soon as well, right? So the successful outcome is ultimately both for the investor as well as for the venture, right? If the company is able to meet the milestone, able to run sustainably, the investor will benefit. They're encouraged to put more money in the company, and definitely they kind of you become more approachable to the larger investors, right? Then that's become makes the whole ecosystem much more successful, and that's why we can call that okay, India as a country has a successful or a budding, startup ecosystem where a lot of ventures are coming up and they are also able to raise fund at a different stages. Yeah, next slide, please. So the future of capital raising in India, as most of you, kind of tracking a lot of startup investment through news, through your network, and through your partners, right? And the startup is ecosystem is ever growing in India, right? And as one of the largest growing economics in the world, right? There are a lot of potential that exists in the market, and a lot of investors are interested, right? So if you follow a right approach and connect with the partners in a regular and logical manner, I think there's no doubt that no business will be spared from a funding, right? So every business has its own value. Every business has a potential to raise fund. Every business kind of deserve to be successful, and everybody kind of should be able to benefit from that overall progress, right? So as a future of fundraising, we see this overall space evolving further. More funds would be coming in, more categories will be created. There will be a lot more SME IPOs, there will be lot more IPOs, a lot of more merger and acquisition in the market. Tier two towns are a great opportunity, right? There's a lot many, clients and customer need to be onboarded. There are a lot many, challenges in the market which are looking at right founders to come in and address with their product solution or services. And then I think this cycle will keep on repeating, and we'll be kind of leading player in the world to kind of generate more unicorns and transform how we kind of engage with different technologies, customer or the clients, right? So we are very bullish on this aspect overall. Yeah. Right. So every growth plan needs more than capital, right? So capital definitely is a backbone of any businesses, right? But let's say when you're looking at capital, link it with a lot of other aspects, with your vision, with the market opportunity, with the growth ambition, kind of strategic guidance that can be added, how you're kind of accessing to the investor, how you're using your growth capital, and how you kind of look at the overall transaction in a more efficient and expert manner, so that you know what you're getting into, and overall transaction become more fruitful for each people that is involved in that particular transaction. Yeah. Next, please. Right. So we how we value add in this overall journey, right? So I try to explain different aspect of fundraising process, how the founders or the venture can better prepare themselves, and how you can better understand the investor aspects, and respecting that there is a fruitful engagement with the investor, and ultimately they are more closure, right? And we as a deal plexes, as a financial supermarket, we work with many stakeholders. We have a specific investment banking solution where we work with a lot of family offices, venture capital and private equity funds. We have a better understanding of their overall prospect, and I think once we are able to engage with the founder in a comprehensive manner, we definitely create a situation where the venture is more market ready and they can better engage with the investor. We have a network of angel investors who are looking at very early stage startups. So any founder who have some thoughts and idea in their mind, happy to engage and kind of understand their story and how they are looking to launch their kind of product or solution in the market, and we will have a long hand holding with them. We have a specific SME IP solution. So companies who are at growth stage and looking at that, okay, they want to kind of follow a roadmap towards SME IPO. We can provide a very strong handling towards that as well. And then we are working with a lot of SEBI registered alternative investment funds who are like cater to different categories on stage, and we are looking to kind of make our relationship with much stronger, and other side kind of presenting a lot of founders and ventures. Right. Right. So I think with that we can sum up the presentation. I look forward to specific questions from the audience, or anybody who kind of have any doubt or on any of the aspect that we have presented. Happy to kind of explain further and make this overall engagement more fruitful. So yes, I believe there may be some question from our audience, or maybe someone if you
Yeah,
want
yeah.
to kind of.
Nitin, Hi, let me take it from here. Uh, Thank you so much, Nitin, for sharing such valuable insights with all of us today. And I'm sure that everyone listening has taken away some practical lessons of fundraising, investor readiness, growth strategies, and long-term value creation for sure. Uh, from my end, if there is one key message that I would want you all to remember, it is this. First, capital is available. Second, investors are also available. And third, opportunity is also available. लेकिन सबसे important चीज है preparation. The business that prepare early, build credibility, and think strategically are the businesses that attract the best investors and the best opportunities. That's for sure. आज की डिस्कशन में नितिन ने एक बहुत इंपॉर्टेंट बात कही. फंड रेजिंग इज नॉट एन इवेंट, इट्स अ प्रोसेस. और इन्वेस्टर कॉन्फिडेंस पहले मीटिंग में नहीं बनता, वो मंथ्स और कभी कभी ईयर्स पहले बनना शुरू हो जाता है. मुझे यहां शाहरुख खान की मूवी ओम शांति ओम का एक फेमस डायलॉग याद आ रहा है. अगर किसी चीज को शिद्दत से चाहो, रिमेंबर दैट डायलॉग. लेकिन फंड रेजिंग में डायलॉग का थोड़ा मॉडिफाइड वर्जन है. अगर किसी चीज को शिद्दत से चाहो तो पहले एमआईएस ठीक करो, गवर्नेंस इंप्रूव करो, फाइनेंशियल ऑडिट कराओ.
Suman, I think
Sorry,
we lost.
Yash, can you hear me?
Yeah, we can hear you.
Oh, perfect, perfect, perfect. So let me just rephrase this last one, okay? I mean, that dialogue that I was talking about, I mean, this basically says, अगर किसी चीज को शिद्दत से चाहो तो पहले एमआईएस ठीक करो, गवर्नेंस इंप्रूव करो, फाइनेंशियल ऑडिट्स कराओ, फिर इन्वेस्टर्स भी मिल जाएंगे. एंड इट डज मेक सेंस. At Deal Plexus, our mission is not just to connect businesses with capital. अगर हमारे पास में दो इन्वेस्टर्स हैं एंड एक इन्वेस्टर को आपको पैसा देना है सिर्फ, एंड दूसरे इन्वेस्टर के पास पैसा देना है और उनके पास उस धंधे की सिखलाई भी है, हम कोशिश यही करेंगे कि वो इन्वेस्टर आपके पास आए, ना नॉट द वन हु हैज जस्ट गॉट द मनी. Our mission is to help founders and businesses and the owners to bridge the gap between opportunity and execution. Whether it is fundraising, strategic growth planning, SME IPO readiness, angel investments, institutional capital access, or even mergers and acquisition opportunities. We are committed, absolutely committed to helping businesses unlock their next stage of growth. And before we move on to the question answer session, one final thought. Many founders believe that investors are looking for perfect businesses. Actually, सच बोलें तो investors are looking for prepared businesses, not perfect businesses. Perfection is very rare. Preparation is possible. So let's focus on being prepared. So thank you once again for joining us today. We will now open the floor for questions. Please feel free to raise your hand or drop your questions in the chat. हम पूरी कोशिश करेंगे कि आज आपके मैक्सिमम क्वेश्चंस एड्रेस किए जा सकें. Thank you, everyone. Have a wonderful day and happy fundraising. Over to the audience for questions. Yash, over to you.
Yeah, hi. So there's one gentleman, Mr. Raghav. He had posted the question that is, can you help an early stage technology consulting company raise loan for purchasing office space and set up infra?
Okay. Okay. So, Raghav, thanks very much for the question. And like you mentioned, that's early stage technology companies. Now, the technology companies, as a nature of the business, does not carry, much of the physical assets. Definitely, they are creating an IP through technology development, but that's in the development phase. As you mentioned, the company is the early stage, right? Now, to specifically raise loan to purchase office and, infra, you know, from a, let's say, asset light point of view, you don't need to really purchase office. You can definitely lease certain spaces, right? And put up your, kind of employees and team there, right? So there's no specific need to kind of, purchase office infrastructure to build up a technology company, right? So you can definitely lease that. To set up certain, let's say, infra, let's say, you want to, let's say, set up services, or you need require certain laptop or, basic, let's say, network infrastructure for the venture, right? For that, I think, loan generation will be a bit challenging because ultimately, there's hardly any physical asset in the company, right? There are certain funds who are, kind of look at convertible structure to fund these early stage technology companies, right? So maybe you have a, compulsory convertible debt structure, right? So a lot of incubators are look at those structures. So that's where you are able to kind of raise some money. The ticket size will not be very large, but yes, you will have initial support in terms of that structure, right? Let's say few lakhs to a crore rupees. And then if you are looking addressing certain, segment in technology, let's say technology which is more beneficial to underprivileged people or tier two towns, or a solution which kind of ultimately enhance employability for certain section of the society, that's where you can also look at raising certain grants, right? So these are, certain options available for early stage startup. If you again look at pure traditional debt and there is no collateral, so that will be a challenging aspect. But definitely the money is important. So interacting with incubators or let's say certain angel funds as well, and looking at certain grant option will definitely be helpful for this kind of venture. I hope that answers your question.
Great. So there's next question with Mr. Ankit Tiwari. He says, I'm trying to developing legal tech company. Can you help me?
Vehicle tech company,
No, no, no.
right?
Legal tech.
Sorry, okay, legal tech. Okay, so legal. If you are looking to launch a venture, let's say in specific segment of legal ecosystem, right? So what we expect from you to kind come up with the specific, venture that you're looking to launch. That which aspect of the legal ecosystem that you will address, how the this overall solution will engage with, let's say, a lot of complainants, or let's say courts, or a lot of lawyers are working in the ecosystem, and how it will help to improve the overall engagement, right? If you have certain ideas around that and looked at specific technology solution that you will be providing, right? Once you're ready with that thought process, I think that's where we can definitely handle. We can work with that. Okay, what could be the roadmap for the company to kind of launch in the market, and then
Uh,
what are the specific steps can be taken to kind of ultimately be more approachable to raise fund, and create a very strategic roadmap around it, right? So that you have confidence that okay, you have approach which is more relevant in the ecosystem, and that has a potential to be more successful in the future. And then you have also a large addressable market. So you do not really want to kind of work in a couple of courts in Delhi NCR or any other city, but let's say targeting different courts and different premises in different cities, and more or less you kind of address the larger issues that exist in overall, let's say, legal community. Right. So definitely happy to engage and discuss what kind of ideas that you have, and what are the baby steps that we can take together to build a proper venture which ultimately have potential to succeed.
okay, so Mr. Ankit has also asked us to connect to a call, then we can
Sure, we
go
can
ahead with
definitely
that.
set up a call on a one-to-one basis, and understand what kind of venture is looking at and where we can really value add.
Okay, so next question is Mr. Rajesh. He
Mhm.
said, we are a solar industry components, interconnect ribbons and bus bars here in Panchkula. We have done the first year a turnover of 1 CR and second year 11 CR. We are looking for angel investor of 5 million USD over the next 3 year span. Please connect me after webinar at my email and all. Um,
I
he
think I
wants to know
think
how we can go further. Yeah.
right. So one thing I can appreciate that you have, Mr. Rajesh, you have really registered a tremendous growth, right? From 1 CR to going up to 11 CR is a very kind of encouraging number, right? We would like to further understand understand your business, and how you kind of engaging with your customer or the clients, right? And what is the kind of roadmap to kind of continue with this growth part, and what are the specific solutions that you're providing? Raising 5 million as an angel investor is on a higher side from a ticket size point of view. So 5 million ticket size is largely, we prefer to raise it, let's say, from our early stage VCs, right? Or let's say some, a growth stage venture capital funds, right? So this is more kind of ticket size which is followed by institutional capital. So, looking forward to better understand your thought process, how you're specifically looking at angel investment and how you're looking at this long-term span to raise this fund. And once we have a better understanding of those, I think that's where I can provide specific insight that what kind of help that we will provide and what ticket size can be raised as part of your long-term loan. Yeah, so I think we can note down your email ID and definitely we'll make a connect.
Yes. So next is Mr. Bhavesh. He said, I'm a certified independent director and currently working with the MSPs and corporate finance area. Uh, as well, they manage two industrial events every month on his associate partner like uh, MFG and business traders. Can we help and guide for this financial struggle?
Financial struggle. I think I would like to have more specific that what kind of financial struggle that you're going through, right? If you are managing an association, what kind of members are there, and as an association, how your value add to kind of benefit your members, right? So I would like to better understand how you're operating and what kind of growth path that you're looking at, and that's where if there is any potential for us to kind of strategically connect, and if there's also visibility to have a certain fundraising, I think we can connect with a more specific insight.
Right.
Yeah. Okay. Any further question, please?
Yeah. So Mr. Kaushik Sarkar is here with us. He said, I have a startup into innovative new physical product catering, different categories from consumer healthcare, innovative sanitary smart solution, and protective automotive products. I need fund only for GIPR or global patent. Once patent adopted, there are funds available for actual products. One of my category have a TG of 8.3 billion population uh, of the globe.
Okay. So, what I understand, Kaushik, is that you're working in different categories, right? And you require certain supports to file a patent and ultimately get the patent, right? Definitely, if you have a clear roadmap to build certain solution which is have some distinct features, right, and kind of more relevant from a commercial aspect, I think if you can work together to kind of understand those prospect and what is the roadmap to kind of for you to file and a patent, right, and looking at this commercial viability, I think that's where we can look at certain engagement, right. From a business standpoint, what I can advise is that having an IPO and getting it patent is definitely critical for a business, let's say. But let's say, from a long-term perspective, if we see that these products are really relevant and have been, able to penetrate or kind of the potential user, the client are able to use it and see the benefit that, okay, they have a proper differentiating factor and they are addressing certain challenges which are there in the current ecosystem, right? If you can work on those around and prove that commercial viability in a better sense, I think that's where we have a better potential for engagement and looking at if you're looking at, any, specific funding support on those aspects, right? So idea remains that, okay, whatever solution is there, definitely you would like to do in IPO, get an IP done for that. But beside that, how that IP will be launched in the market and how we kind of look at its commercial viability. Right? I think these two aspects we need to kind of sit together and discuss and create a roadmap. And that's where we can specifically see that, okay, what is the proper stage to first provide support to get the IP done, and then after that, if you also require certain support to launch in the market. I hope that's helpful to you.
Great. There is next question with Mr. Shalendra. He said, we are a manufacturing company and currently doing B2B business. We are looking at going D2C now with launching branded product. We would like to raise fund for the same. We'd like to please explore our option. He also provided his number and email.
Sure, sure. So we will definitely connect you over the phone and email, right? But what I broadly understand, and for the benefit of the larger audience which I hear, is if you're working in a B2B space, you have very limited or no visibility as a brand in the market. Because I think, you're working as a contract manufacturer or you have certain product who are, kind of more usable to the B2B client, right? So you do not carry any, you know, visibility as a brand. And definitely, if you go in, D2C kind of a segment, you require strong distribution network, right? So these require a lot of, funding and strategic support, right? That's where I think you need to have a very step-by-step approach that, okay, what are the specific product which you would like to directly launch in the market? As a brand, what kind of perception you would like to kind of create in the market so that people are able to feel these distinct features that as a brand, the certain things are better, right? I am not sure that what kind of product you are kind of offering to your video clients at the moment, but let's say with better understanding around that, what is the strategy can be built to kind of go in the D2C market? And then, both the vertical will be again independent, right? I think you will not be following an approach where you will shut down your B2B space and straight away go into D2C, right? The both businesses will run in parallel. And there is has to be a specifically strategically demarcation in terms of what is the approach or strategy you're following for a B2B business and how you kind of operating from your D2C aspect, right? And I think, once you have a clear strategy for both the side, you can definitely have full engagement and there is visibility to kind of, uh, you will be able to achieve a strategic milestone, whatever sense you're looking at.
Mr. Shalain said thank you. Okay, the
Thank
next
you.
question with Mr. Bala. We are a very early stage hospitality, hospital ops SaaS startup and are in the process of setting up all sort of processes from sales, marketing, finance, founders office, etc. at the company. We are also acquiring a few paying customer but don't have them yet. We would like to know what kind of strategic growth and ideas we can explore. Idea is to expand to foreign markets over time as well and not just limit to Indian market. So basically he's into ideation stage, needs more support.
Right. So, I think you are operating in a broader segment. You have a range of solutions or the services that you are, looking to offer, and then you also, kind of looking to go overseas market, right? So, appreciate the long-term vision, but again, we have to follow a very step-by-step approach that, okay, what kind of or the bunch of services that you initially start with have a very sticky relationship with your customer, whether it is B2B or B2C, right? And prove your point that okay, I have a relevant solution as per my insight or experience in particular sector or in hospitality in your case, right? And enhance our customer base, right? Gradually, it's definitely not going to be a long term. During the initial year, the business may not be, sustainable. You may have a lot of burn because, you may be providing your services at a discounted rate, or maybe you have a higher marketing cost, or maybe, there's some infrastructure cost that you have to incur, right? So we have to kind of factor in for all those aspects and then create a, let's say, a executable plan for next 12 to 18 months at least, and see that where the business will be able to reach after that 18 months, right? And whether the stage is like, kind of going to the market to raise fund, right? In terms of, let's say, how differentiated our solution is, right? What kind of, top line or the bottom line, like in terms of revenue and margins we are looking at. And then in terms of what is the potential for our growth going forward with raising of certain funds, right? So I think there has to be a very step-by-step approach with the proper handholding and strategic thought process, and kind of making it the whole program as part of your overall, let's say, a plan on paper as well, right? So that you remain stick to that overall approach and ultimately build a business which is more kind of logical and ultimately able to generate returns for yourself as well as for any potential investor coming in.
Mr. Bala said, thank you for the insight. This is very helpful. We will get in touch with the board help as well. Thank you, Mr. Bala. Next question is Mr. Nagaraj Iyer. He said, we are starting our fintech catering to business, to gold business. The founders will do the seed funding, but for growth, we need funds. So, at what stage should we approach a VC that the equity dilution is less than if we seek at early stage? This fintech has specific target audience as well vendors.
Okay. Okay. I think that this is very, I think important question here, right? So as a founder, you are able to put the seed funding and let's say build a fintech solution, right? Which may be, kind of not fully developed or maybe, ready with some features which help you to engage initially, right? And I assume that you already have a, good experience in the overall fintech space or let's say working with NBFCs or any, allied services businesses, right? So I see certain insight there, right? And you are able to, invest certain money by yourself. I think next step, before looking at VC, next step should be that, once you invest this seed funding, you should also approach certain people in your network. Let's say, your professional contacts, some people in, let's say, friends and family, or let's say even, if you feel that, that ticket size will not be, good enough, you can also further engage with specific angel investors, right? That ultimately help you to raise a decent amount so that your fintech solution is complete and you're able to launch it in the market, right? So that's one aspect, right? With the, friends and family and everything, you will not have a much dilution, right? And, these deal structures are not very complex. It's more of a face value where people believe that you are committed to your venture and there's definitely be growth in that. So through that, you can structure the overall thought process and get the funders. Once you then, start gaining traction on the market where the customers are, paying, right? You are able to showcase the value add that the fintech solution is bringing, right? And ultimately address certain challenges, right? Maybe the other industries are facing, maybe the customer is facing, right? Or there's maybe, some security issues that are already existing and trying to address that, right? Once you slowly kind of prove that point, and that's where you become approachable to more VCs. Right? Now the VCs again have different categories. They are early stage VCs, they are VCs who are also working in growth stage, right? And they are also VCs who are specifically looking at fintech, and they are VCs who say that okay, we may not specifically look at fintech, but we look at technology, right? So there are different categories there, right? So we need to kind of then list out that as per our, ticket size or the kind of fund that you are looking to raise, what would be the specific, potential VCs who could be, fit in that criteria, create a, long-term roadmap in terms of, let's say, what we can achieve in next 5 years with certain fundraise. What are the specific segment we will enter in? You may be offering a couple of services at this moment, but as you grow, you will add on more to your kitty, right? And ultimately, how that help you to kind of generate margin in each of the segments. Right? Now, with that roadmap and the ticket size, and then driving the expected valuation as well, right? So benchmarking other fintech companies, the kind of fund that you're looking to raise, and if there is kind of specific solution which are we can easily benchmark, we can also come up with the indicative valuation, right? So before going to an NVC, you will broadly have an idea that okay, with this structure, what kind of dilution I'm looking at, right? And what are the reason behind that those dilution, right? And with certain adjustment in overall deal structure, whether we can minimize that uh, dilution or not, or if we again have to go with certain dilution, again how the venture will benefit through it, right? So we will, kind of get proper awareness, be more informed that what we are getting into, right? Or even if it attracts certain dilution which is higher than your expectation, with the next round of funding, how the business will scale, and if that point, you have a much bargaining power to handle that further dilution to the minimum level, right? So we as a team or as a, partner with you, work with those aspects on a very detailed manner, right? So that, you become aware that, okay, how the investors are looking at this kind of transaction, right? Fintech is a very, booming area, I would say, in a very casual manner. A lot of ventures are looking at fintech solution. A lot of investors are looking at fintech solution. There are a lot of challenges which needs to be addressed in the overall fintech ecosystem, right? So there has to be there is a strong potential. And I think being a relevant person from this industry, there is no doubt of success of your venture. But yes, we need to work on a very specific aspect so that we have a kind of a further approach and steps that we can take together so that your whatever fund that you're looking to raise, you are able to raise and able to meet your milestone as a part of your growth as a venture. Right. I hope that is helpful. And my idea to would further understand your specific context solution and how we can kind of partner of each aspect from an angel investment point of view and as well as from a future VC fundraiser point of view.
Okay, Nitin, hi. Thanks. Yash, I would like to add to that thing, okay, because I think it's a fantastic question that I was going to ask. That there is basically a balance which needs to be made, right? I mean, so, and the decision, I mean, basically lies on the founders or maybe the advisors that
Mhm.
whether you want the fund where you are diluting your equity, you want to do it now, you want to do it later. But please understand, right now, I mean, Nitin, we have spoken from an equity point of view, okay? Now,
Mhm.
you also have the option of raising funds via the debt route. Now, that
Mhm.
is one of the options which is available. But is debt good for you? It is not good for you. That remains a question, okay, at that stage of, at which stage your business is in. Now,
Mhm.
we as a company, Deal Plexus, we have that option too. So when you speak to Nitin or when you speak to any of our other team members, you will get to realize that why we would advise you that, especially if you have collateral, you can go in via the debt route also. If you, I mean, if they feel that it is okay right now at that stage of your business. Otherwise, obviously, equity sounds good because you don't have any liabilities on your shoulder if you want to look at it that way. But obviously, responsibility does lie on your shoulder even in that case. But we have got multiple options. So if you
So
have any
one thing,
questions, on, yeah,
one
yeah,
thing I
please,
have.
Nathan, please.
No,
Yeah,
as we talked about, there are different categories of equity investment in the market. There is also
yes,
different categories of debt, right? So debt, one should not straight away think that, okay, I will have some fixed liability over my head and have to pay EMI each month, where I'm just getting to start my venture and, that rule really is not suitable to me, right? So there
right,
are different categories. The government is looking to kind of support startup in a very different aspects, right? The banks are coming up with new initiatives. There are also debt funds in the market, right? And that
right,
also, follow very, innovative structures, which is ultimately beneficial to the founders and overall ventures needs, right? So it will be a great idea to engage, understand those categories, understand where you fit in, right? And I think the last question was like how they minimize the dilution. So while you're raising that, you don't have any worry towards diluting any equity in your venture, right? So you have a long-term control over it. But definitely,
absolutely.
equity comes with its own benefit, debt comes with its own benefit. It's just that, okay, you understand those categories and approach it in a right manner with the right approach. And I think, like I earlier said, there's no doubt that the venture will be able to raise funds.
Yeah.
Yeah. So we're short of the time, but I think we have still time to take a couple of more questions. So if anybody wants to ask anything, or maybe
Yeah,
somebody
there's one
wants
more
to.
question with us,
Mhm.
with Mr. Manish Ranjan. This is
Mhm.
Mr. Manish Ranjan from Vapi, Gujarat,
Okay.
developing the startup preventive health tech ecosystem
Mhm.
featuring family healthcare, elderly healthcare, occupational healthcare. We are at
Mhm.
ideation seed stage, currently bootstrap. We need
Mhm.
funding for commercial development. How to go
Mhm.
ahead for the raising funds? Please guide.
Okay, got it. Okay. So, preventing healthcare, again, is a very exciting space to work in, right? I think India as a country is going through bigger healthcare issue or a larger. So there's a market opportunity there. People need a lot of awareness from a preventive healthcare point of view. Is not that somebody get into certain trouble or feel some kind of disease or uneasiness and then only they contact any healthcare professional. Preventive, where you can create that awareness, make people aware that, okay, if you're facing certain routine challenges from a health point of view, they should be feeling more confident to approach a consultant or share their experience with somebody who can understand from something health aspect, right? So definitely there's scope for that. Now, broadly, what I understand the question is a more services approach that you're following, right? So from a services point of view, I think whether you would like to work through a center, right, or chain of centers, right, or whether you kind of engage with different doctors or health practitioners who are sitting at different location and kind of engage with them certain so that they are kind of better interact with their ultimate patient or the people so that they become more aware. I think he mentioned he's developing an app, right? So from a technology point of view, what are the features that you will be add and how the person will be able to share their particular problem on the app, right? And if the app is able to also capture certain um, let's say health points of a certain person as well, right? So we need to understand how this app would kind of transform into, right, and how we will engage with your patient or your doctors that you're targeting, right? And with your own efforts and bootstrap efforts, where the app can reach, whether it can reach a commercial stage or still you feel that okay, it will be in the development stage only, right? And now, as a founder, what are the insights that you carry both from healthcare perspective as well as from the technology perspective, right? So maybe you may be a healthcare professional who understand the healthcare challenges, or from a technology point of view, you want to kind of onboard a co-founder who comes with a strong technology background and help you to build that app, right? And you both build that venture. There is option to kind of outsource it to the certain vendors, but to my experience working with some technology founder, that relationship sometimes is not fruitful because that vendor is not able to kind of connect or relate to your venture, right? So that challenge sometimes comes, and that ultimately further enhance your fund requirement, right? So I would like to understand with your own resources and fund, which is the stage that you can reach at, and then how much fund you would require to reach at least the commercial launch stage, right? And whether the ticket size can be serviced through, let's say, some angel investors, right, or some say very early stage VCs if that's a possibility, right? And with that, what is the timeline to reach a, let's say, sustainable scale, right? You think you can reach that in 1 year, 2 year, or like whatever the timeline is, and we had to kind of put that into perspective. And then I think we have better clarity that, okay, what kind of approach that can follow to get an institutional investor or at least VC into this venture, right? So I think we require a bit more, specific information to gauge that.
Yes.
But yes, primarily what I suggest to is that understand that how you feel fit in the shoes of a healthcare person, how you handle the technology aspect, and create a value-adding app or the solution ultimately. And then what's your insight towards creating a sustainable business with a proper fundraise only. I hope this is helpful, and we are happy to engage further on one-to-ways basis to further
Yeah.
deliberate on this.
Mr. Manish has asked to connect us separately as well.
So I think yes, you can download or note on these details. And I think we
Yeah,
can
yeah,
engage
I'm
quickly
noting
for this.
everything.
Yeah, sure. Please.
Yes, we also have some hands raised. I mean, so I see some hands, I mean, raised for quite some time. If we can look at that aspect also, yeah.
Hold on. So, so Mr. Manyar has raised his hand. Would you like to speak,
Yeah,
Mr.? Yeah.
yeah. Peace and blessings, team. First of all, it was a wonderful session, and thanks for arranging it.
Thank
A
you.
quick introduction of mine. I am an entrepreneur having vintage of 10 years. My company's name is Kudrasoft Products and Services Private Limited. So we are ready with the product. We are looking for investments for pan India expansion, I mean to say. And for that, should we go with SME IPO or any other approach? Can you just add to that? And how to take it further from here? That is something I'm looking for.
One quick question here for you, sir. So, like, your venture is already generating revenue, or you're still
Yeah,
doing
it's already
some?
generating revenue. Yeah, it's already generating revenue. It's a proper organic growth.
Mm-hmm.
Compliances have been followed right from beginning because we were having a very clear vision of targeting the MSME and retail segment in our country, as we
Good.
believe that 40% of our country GDP come from explicitly from MSMEs and retailers, I mean to say. So we
Right.
are focused on that. So
Mm-hmm.
yes, we are generating the revenues and profits as well.
Excellent. Thanks very much for that insight. And I think, you're doing very commendable job on the ground, right? So, what I broadly feel that you are ready to, kind of raise a growth stage funding, right?
Mhm.
And we can better understand the scale of the business, as we further engage. But let's say, straight away thinking of an SME IPO is something, I think you can have a better roadmap. Because, let's say SME IPO or let's say mid-board IPO as well, we prefer that the venture has a better visibility in the market. But I understand that you have created a good, business with your own efforts and bootstrap efforts and your insight, right? But let's say if you have to spend a lot of money in marketing and, kind of be more visible to your customer or the client ultimately, that requires large amount of fund, right? And a lot of funds are looking at this kind of, ventures who are at growth stage, and they can help you to kind of, raise fund so that you are able to approach your market more aggressively, right? So, from marketing aspect, from adding more product aspect, and like you mentioned, you want to kind of expand nationally, right? So, entering different geographies, right? So will have enough cash flow so that you can confidently build your strategy and execute on the ground with a, let's say a certain comfort level, ultimately without, kind of, having much of the cash flow challenges, right? And once you capitalize on that, I think that is a better stage to then go for an SME IPO or even target a main board IPO, right?
Mhm.
So one example, if I can give you, is that if you raise an SME IPO, the average ticket size remains around, I think, 20, 25, 30 crores. Or if there is a outstanding example, the company is able to raise 70, 80 crore rupees, right? That's
Fair
a
enough.
very outstanding. So ticket size remain 25, 30, 35 crores kind of a range, right? This kind of money is easily can be raised through VCs, right?
Mhm.
Definitely with VCs, again, it's not a cakewalk or a easy road. You have to again build up a proper strategy, again with the product, come up with the product differentiation and all sort of different aspects. But here you have a less burden of, a lot of SEBI compliances, right? And if you benchmark against your compliance and overall requirement, vis-a-vis, funding through VC, I think that more maybe a much fruitful for you ultimately. And once you raise one round with VC, and then subsequently maybe you can able to raise larger round, or if you feel that okay, that is the right stage for you to go approach for an SME IPO or a main board IPO, I think that will be much fruitful because the investor can help you to also kind of work toward a lot of corporate governance aspects, right? They have been, working with the companies who may have, kind of launched IPO, earlier, one of their company may have had an IPO. So they can, support strategically on those aspects. And I think that's you have a more comfortable approach to launch an IPO then. To me is a better approach. But yes, would like to better understand the dynamics of your businesses. And that's where we can come back with more specific, insight or the comments.
Sure. I think after this meeting, we can be in touch with you and figure it out a way and get your support
Sure,
on
sure.
that.
Sure,
Possibly.
definitely.
Thank you.
Looking forward.
Thank you, Nitin.
Thank
Thank you. I
thank you.
appreciate it.
Thank you.
Yeah, this another question from Farm Eat Co. Apart from
Mhm.
banks, do debt funds do unsecured funding, and to what extent in amount?
So there is debt, collateral free or unsecured fund, debt available for the businesses, right? We have to understand again, what kind of business it is and what stage, it is at, right? And accordingly, then we can advise. There are definitely some, government schemes. I think we had a, webinar regarding that in our earlier session, I think with someone only and team, right? So
Right.
there's definitely, schemes available who are collateral free and, unsecured. So we have to kind of look at what stage of a business, what kind of business and what kind of funding that you're looking at, right? And accordingly, I think team can create a solution for you that, okay, what is the kind of money they can get without, any collateral and how that can be structured so it become win-win for both sides, right? So, but definitely to answer specifically your question, there are funding available which are collateral free, right? But again, there has to be some business sense. You must have a running business, and that should not have a very kind of large burn, right? There may be a certain, let's say, EBITDA level profitability has to be there, right? And certain aspect of growth. And if you're looking for some specific government funding, so some impact element of creating jobs or, kind of operating in certain segment which are not very popular in, other, kind of businesses which are there in the market, right? So we need to understand those aspects, and I think that's where we can come back with a specific solution.
So they have dropped their number as well, and we can connect with them later.
Sure. So, I think the overall discussion in a, the sense is coming out that, there has to be a lot of engagement between the venture and the advisor, right? The better we understand your dynamics, the better we are able to kind of, help and bring a solution which is ultimately achievable on the ground, right? Definitely, as a venture, you have certain expectation and certain milestone that you want to cross, right? But like we discussed, through the whole that there is a investor aspect, and that may be sometimes totally different what you're thinking, right? So we need to kind of understand both sides, do some bridging work, and create a documentation and strategy around it. And then I think then we are better ready to hit the market, and our engagement with investor is much more fruitful. You will enjoy that engagement because the investor will respect you. You will be able to respect the investor in the kind of queries that he comes up with. And ultimately, if there's a trust between the both the parties, and I think that is the best deal we can do in the market, right? So let's be more engaged, understand the different dynamics and prospects, and kind of be ready with the documentation and strategy and roadmap and certain aspect of deal construct as well. And I think then your engagement with the investor is much more enhanced, fruitful, and chances of closure is much more enhanced. And that's where deal plexes add very specific value, right? So I carry more than decade experience in the space. Suman is instrumental, in overall creating that ecosystem, right? We have a proper team to kind of guide the founder, the venture, and the management team in each and every aspect. Work with the team to from a documentation side, share a lot of insight towards how the investor dynamics has been or how it is changing, how the kind of geopolitics is affecting that, how the economic factors are kind of affecting that, and then we remain updated and kind of upfront in terms of any query that comes on the investor, and straight away just say that okay, we want to close the deal as soon as possible. So I think Suman, if you have some maybe closing comment, if we don't have any further questions.
Yeah, I have just one
Mhm.
cautionary comment. Anybody
Mhm.
who's put in their numbers on the common chat, right? I mean, so be extremely careful about where you're getting a call from,
Mhm.
because we've given our numbers out here. If you look at the screen, you will get to see our support number. You get to see our email ID, right? And
Mhm.
we obviously can take the responsibility of calls coming from our end. But in case a call is coming from a third party, since you're putting your numbers on a common platform, so it will be advised that you deal directly with our team members. I mean, after giving a call on that support number or sending an email. That's the only thing which is there. And also, just to add, before we finally say bye to everybody today, please explore what the Dealplex's platform can enable you. Whatever your dreams are, so dreams, obviously, I mean, so you need to make sure that it works. Also, you have the enablers. We have those enablers for your dreams. Like I told you, so we have got multiple funds of our own in case the parameters are too strict and we can't raise funds for you because of certain lay down parameters which are already existing. We will help you to generate funds or generate better revenues via funds through third party. We've got collaboration with banks. We've got tie-ups with NBFCs. We got tie-ups with fintechs, AIFs, private lenders. You name a segment, and we've got tie-ups with them. So we've got 50 plus tie-ups, which is actually helping us add so much value to each one of our customers who are coming to us. And it's like a collaboration. And like Nitin put across something so neatly and clearly, that the more we discuss, the more we talk, the better we understand you, the better products we can be able to extend to you. So looking forward to hear from each one of you who's attended today and who are still around. And please do share our number and our email ID with your friends and family who may be interested in the same sphere but could not attend because of whatever commitment and prior responsibilities they must be having. We would love to take our family ahead. We would love to increase the numbers, and you'll be pleasantly surprised once you get in touch with us. Thank you so much. Wishing everyone a very, very happy weekend.
Thank you, everyone. Thank you very much for joining and wish you a very happy weekend. Thank you, everyone. Thank you, Suman. Thank you, Yash.
Thank you, Nutan.